Hello everyone, it's Davide here and welcome back to Learning Finance. So in today's video guys, I want to talk about Apple stock, ticker symbol AAPL, and I'm gonna do an Apple stock analysis because we have just had the Q1 earnings for them, and I have seen someone was asking, well, they have destroyed earnings, why the stock is going down, so I'm gonna try to answer to that. We are gonna see what happened. I'm gonna also do a fundamental valuation of the company, so in order to understand what's the fair price of Apple stock today. The only thing I ask you is leave me a like, it's very important and I thank you for it, and subscribe to the channel so you don't miss any new updates. Let's begin. So here we go. Apple stock earnings, earnings per share, they did 1.68 against, so beat expectations against 1.41, as well as revenue. They beat expectation with a huge 21% year over year. iPhone business has been very great, plus 17%, services plus 24% year over year. Even incredible, the Mac revenue 21%, iPad 41, incredible that as well. And they have also managed to reach almost a 40% in gross margins, which is incredible for a huge business like Apple. A very great earnings, and we saw the stock there after that came down a little bit, but that in my opinion was pretty normal as the market usually anticipates earnings, so we have seen that the stock went up before the earnings and then on the news pulled back a little bit. When we take a look at net sales, we see that this is from basically their earnings statement. We see that the products and services, so products are obviously the higher piece of the cake over there, and the biggest slice is the iPhone business. The iPhone business is always very important for Apple, and as history explains, when they have a product, so the year when they release a very successful iPhone, and not all of them are successful, but in the case of the iPhone 12, they had a very great impact. And plus, we don't have to forget that the M1 processor, okay, has been a huge news. So they sold a lot of new devices because of it, and also people bought new MacBooks with these new technologies. All of that made Apple an incredible jump in revenue. Analysts are expecting that Apple in 2021 will go up in revenue by 20%. It's very interesting also to see the geographic position, because this is also the reason why I am bullish on everything related to retail in China. And look at that, year over year. And 2019 December, $13.5 billion in Greater China, and that exploded to 21.3 billion. So this is almost 65% year over year growth in the Greater China region. When we take a look at the balance sheet, we see that they have, in the last one that they released, we have the cash and cash equivalent, and then also marketable securities, which they can be considered as cash. All of that together push up to $76 billion, almost 77, which makes Apple obviously very liquid in terms of financial risk. Current assets are more than current liabilities, as we can see from there. So the ratio is above 1, and Apple has some debt, we cannot deny it. However, almost all of it is long-term debt, okay, $99.2 billion in long-term debt, while in terms of short-term it's just 7.7. So in terms of financial risk, financial distress, there is nothing to be worried about, because as I told you, first of all, they can pay the short-term debt whenever they want. Then all of that together put them in 77 billion in cash that they have today. And even though the total debt is more than 100 billion, most of it is long-term. And Apple is extremely profitable, so they don't have much of a problem in terms of debt, although they have it. Now, when it comes to the fundamental valuation of Apple, now, first of all, if you want to understand how I did it, I have a video over there where I explain everything step by step, plus I give you for free the template so that you can use it. For this valuation, this is the important key. We can see the averages. Now, the net income, very great, as we can see from here, always above 20%. The free cash flow divided by net income, 112. And then here is what I was telling you before. The historical growth rate of Apple is 6.41%. Now, due to mainly the M1 processor, new technology, new developments, we have seen that Apple now is expected for 2021 a jump in revenue of 20.71% from analysts. Okay, so you can imagine that compared with the historical growth rate in the last 5 years. That's an extreme jump, and that's what happens when they release a very successful product. Same stuff has happened when they released the iPhone 6, very successful, a record in sales. So when we want to evaluate Apple, all we have to ask ourselves is how much they will continue to grow. Now, the company today is above $2 trillion, which is the biggest company in the stock market. But it is an amazing business. They sell amazing products. The thing is, well, as we have seen with Facebook and stuff, the problem when a company becomes so big is that even though they have the financial power to buy more companies, to open new businesses, to explore new niches, okay, to develop new products, the thing is, will the government allow them? Because it's all when you become too big, there is always one problem, okay, and the problem is competition. We have seen that with Facebook, we have seen that in China with Alibaba. So in terms of growth, Apple, how much can they continue to expand in order to understand what is gonna be the future growth rate, which is all we need to do to calculate the fair price of Apple. Now, in terms of future projects of Apple, I have seen that there is the Apple Car business area, which usually is very competitive. And if you look at history, the car business is not something that makes you a lot of money in terms of net profits, okay? Anyway, that's a project, for example. Another project that Apple is working, there are some rumors, and it is in Apple glasses, virtual reality, okay, and augmented reality. So that's another stuff. We have seen that Facebook has Oculus, which is they are one of the major players, even though people are not actually paying too much attention to it now. But if we believe that the world of gaming, for example, and even research, when we have seen medical research and stuff, if we believe that this world will go through this technology, well, Apple is coming. They have a project. As they say here, obviously there are rumors, is investigating multiple ways to virtual and augmented reality could be implemented into future iOS devices or new hardware products. Apple's focus on AR, VR has ramped up over the past few years, and an augmented reality product could launch as soon as 2022. Okay, so that's another part of the business where they can continue to grow revenues. So when it comes to the valuation, what I have done, I've taken the first 2 years of analysts' expectations. So 2021, the huge jump in revenues of 20.71%. And then 2022, $345.5 billion expected in revenue. And then I put the average net margin, which is 21.37. We have seen that it's pretty stable over the past few years. And then 108 as a free cash flow to net income ratio. Then we have to understand the growth rates. Now, here comes the scenario analysis. As I told you, on average, it was 6.41%. However, analysts are expecting that in the next few years, Apple can grow faster due to this change in technology and new projects. Okay, so as the normal case scenario, I put 13% until 2025 and then 8% until 2028. The requirements, 8.5 in discount rate, and a 3% perpetual growth. That will gives us a fair price today of $114.59 per share. Then when we take a look at the bull case scenario, here I said a 17% until 2025 and then an 11% until 2028. Now remember how much it was the average, okay, so 6.40%, and that would be a huge boost for a company which is above $2 trillion in market cap. Okay, so anyway, we will have today basically 127.6 dollars per share. The requirements are still the same for all the scenarios. Then over there we have the bear case. And for the bear case, all I've said and assumptions is that Apple, after this boost that we have seen this year in new technology, will continue to do what it was doing before. Okay, so a mature business, a growth rate around 6% until 2025, and then a 4%. That gives us a fair price today of $92.14 per share. Now, when it comes to the probabilities, I put 50% to the normal scenario, 30% to the bull case, 20% to the bear case, and that's the fair price that we have, $114 per share for Apple stock. Now, when we talk about Apple, another thing that we have to point out is that it is a huge profitable business. So as opposite of all this unprofitable business where you have dilution, on Apple, they try to bring value for investors. And as we can see from basically here, we have that the shares outstanding from 2011 to basically today, they went from 26.2 billion to now that needs to be updated anyway. And right now they are around 16.8 billion shares. It is more than a 40% decrease, meaning that the shares have taken a 40% plus in growth, okay, in basically 9 years. And they are able to do that with profitabilities and buybacks. So that's something to keep in mind. Plus, they introduced the dividend in 2012, which has been growing exponentially from 9 cents per share. Right now is around 81 cents per share. So obviously investors, that's what they are considering. When you invest in Apple, you try to get a decent price. If you have a dip, then you pay attention to dividends and mainly buybacks, okay, which they will provide you value, even though the growth rate of the stock will probably slow down again. Okay, that's pretty normal in my opinion. It's not a very early stages growth stock. Now, when we take a look at the graph, here I draw for you this green rectangular figure which in my opinion is the fair price of the stock. Okay, so from 108 to 118, as you can see here, the stock consolidated for months in this range. And in my opinion is where you can have the full price, so the real value of the company. Now, does that mean that the stock today is overvalued? Absolutely not. Okay, now Apple is a wonderful business and most of the times it trades at a premium. What that means is that if you buy the stock today, you are paying the full price. Okay, you are not getting a bargain. Now let's say the hypothesis that in the next couple of months some fear in the market, I don't know, you can have, let's do an hypothesis, a pullback, okay, 1 week of fear in the market, you have the Apple stock goes down, comes in that area, goes even lower, then you will have a bargain. Okay, but that doesn't mean that the stock today is extremely overvalued. It's just trading at a premium, as Apple always does, due to the amazing business that they have. So that's my opinion, guys, and that's why we have seen that the stock after earnings actually came down a little bit. That's my opinion, that's my analysis. I hope you find the video interesting and subscribe to the channel. Leave me a comment down below, tell me what do you think about Apple, and as always, guys, have a wonderful day.